Season greetings. I really believe that you enjoyed your Christmas and that we are now waiting to open the new year, that is 2026, in style. Yes, mine is just to wish you a happy 2026 full of ambition and prosperity. Yeah, all that you never achieved in 2025, let's be hopeful that you are going to seize them in 2026. One of the things that I would want you to incorporate in your plans or come 2026 is financial planning. Yeah, and in financial planning you should back it up with financial literacy. Yeah, and that said, there's a speculation I saw online, actually on internet, that NSSF rates are going to be doubled, or rather NSSF contribution are going to be doubled, in that if you are to contribute, maybe if you are contributing 8,000, then you are going to contribute 16,000. Yeah, but I want to respond to that and clear the air on the same as a professional from finance field. And from at the end of this video, you are going to gain insight on how NSF has been moving, how the rates have been increasing, not rate per se, but how the lower earning limit and upper earning limit have been increasing since the implementation of NSSF Act 2013, which was actually implemented in 2023. Yeah, so stay tuned as I take you through this so that you be able to understand, and also you be able to calculate amount payable or amount to be contributed by you to your pension. Yes, so that you can know how much are you going to remain with as disposable income. Yeah. So just like I've mentioned, NSSF is usually I can say it's a forced saving, because if people are left to contribute or save on their own with regard to pensions or retirement benefits, then I'm very sure most of us will not be disciplined enough to keep on remitting the funds to the institutions or pension institutions. So that's why government saw that majority were retiring without dignity. They were retiring and becoming worst off in terms of finances. So they made that one to be a law, so that everyone must be deducted at the source, withholding. Yeah, at the source, some funds to be remitted to NSSF or other pension funds. Yes. So this is how it works. A total contribution is usually 12% of your pensionable gross income. Yeah. Of this 12%, 6% is usually contributed by your employer and 6% contributed by you as employee. Yeah. But before the implementation of NSSF Act 2013, before the implementation of NSSF Act 2013, the contribution used to be stable, like it used to be standard, no increment. But once the NSSF Act 2013 was implemented, now the contribution usually change or year on year. Yeah. So as you can see here, we have LEL, which stands for lower earning limit, and UEL stands for upper earning limit. Now, as you can see, I've captured since the implementation, I said that NSSF Act 2013 was implemented in 2023, and you can see lower earning limit to be 6,000. It increased to 7,000 in 2024, and and in this 2025 it is actually 8,000, and 2026 it will be 9,000. Then when you come to upper earning limit, UEL, in 2023 it was 18,000. In 2024 it was 36,000, and in 2025 it is 72,000, and in 2026 it will be 108,000. Yeah. So that's how the increments have been established, even in the schedule, captured under that act. So in this example, I want to assume that you are earning 80,000 per month. You are earning 80,000 per month. Yeah. So this is how you are to determine amount payable to your contribution. To your pension scheme or pension fund. Then before even I explain this, I want to tell you that pension contribution are usually divided into two. We have tier 1 and tier 2. So mostly tier 1 is usually funded by this lower earning limit. The lower earning limit, then the upper earning limit usually goes to tier 2. And government, through the Retirement Benefit Authority, gave the employers a free will to choose either to contribute the tier 2 into NSSF, which is a government pension scheme, or contribute it to a private employer's private pension fund or provident fund. So let's break it down. Assume you are earning 80,000. So what we just do, you take 0, because I've said it is 6% of your gross pensionable income. So you take 0.06 or 6% of 8,000, we get 480 shillings. So this one will go to tier 1. So this is tier 1 actually. It will go to NSSF. So this mandatory tier 1 must go to NSSF. Yeah. So 480. This will go to NSSF. NSSF is National Social Security Fund. So I've said that is for the government. Yeah? Then tier 2, for you to calculate tier 2, just take the upper earning limit, which is 72,000, you less lower earning limit, because lower earning limit already we have calculated, we have used it to calculate here. So you subtract, you get the difference between 72,000 and 8,000. Then you multiply by 0.06, you get 3,840. Yeah. So when you add tier 1 contribution and tier 2 contribution, you are getting total contribution towards your pension is 4,320. So what do I mean? I mean, this is the contribution on your side as employee. And I've said very well that when you contribute, employer also contribute equal amount. So that's why I've gone ahead and calculated amount that you are supposed, you as a person, you should understand how much have I contributed to my pension fund or pension scheme per month. Yeah. So being that employer also contribute the same amount, so you just multiply this times 2 to know that your pension fund account is having how much at the end of the month. So at the end of the month, this is what you shall have contributed to the pension scheme or pension fund, which is 8,640. Just you double this, because your employer also contribute equal amount. So this is what is deducted. So if you check at your payslip, if you are earning 80,000 in 2025, if you check at your payslip, you will find that the deduction, NSF deduction, is 4,320. Yeah. and I've broken it down. So 480 went to tier 1, and 3,840 went to tier 2. So I wanted to answer the question of, is it true that NSSF contribution are going to double in 2026? Let's look at the calculation, and numbers won't lie. Yeah. So in 2026, we said that the lower earning limit is going to be 9,000, and upper earning limit is supposed to be 108,000. Yeah. So let's, using the same formula, so let's calculate what goes to tier 1. 0.06 times 9,000. That gives us 440. So the increment here in tier 1, in 2025 we contribute 480, but in 2026 we're going to contribute 540 shillings. Then when it comes to tier 2, what do? Of course, we have the upper earning limit to be 108,000, but we are assuming that your earning is 80,000. So you are not going to exhaust the all capacity, yeah, for the contribution of this. You are not going to exhaust this upper limit of 108. So what are we going to use? We're just going to use the actual amount that you are earning. So because you are earning 80,000, but upper limit is what? 108. So we are going just to use 80,000. So what do? We take 80,000, we less 9,000. 80,000 less 9,000. Whatever we get, we multiply by 0.06. Then we get what? 4,260. So in 2026, if you're earning 80,000, then whatever your amount you're going to contribute to tier 2 is 4,260. So if you add tier 1, tier 2, what are you will come up with 4,800. So if you are an employee in 2026, your payslip NSSF deduction will read 4,800 if you are earning 80,000 gross, yeah, and you are pensionable. So the deduction on your side will be the deduction that we'll see on the payslip. The payslip is only capturing what is deducted on you, not what is contributed by your employer. So it will be 4,800 if you're earning 80,000. But now, for you to know how much have you actually contributed to your pension account, or pension fund, you just multiply whatever you contributed times 2, because the employer also contributes the same amount towards your retirement scheme. So you just multiply 4,800 times 2, which is coming to 9,600. Now let's compare. This is the contribution in 2020. Total contribution by you in 2025 is 4,320. Total contribution by you in 2026 will be 4,800. So that answers the question, is it going to double? The answer is no. It's obvious no, because this is 4,320. For it to be double, it would have been 8,640, but we are having 4,800. So the speculation was wrong. Yeah. So have it right from FA Juma that the increment is there, yes, but it's not double. That one having been explained, I would want also to give insight on perspective of this NSSF contribution. And I want to tell you that NSSF contribution is actually not taxation. So some people usually feel like it is infringing you, or it is a punitive act. It's not a punitive act, because NSSF contribution is actually your money. Yes, so it's a forced saving. It's a mandatory saving that is enforced by the government to ensure that when you retire with dignity. So and even to make it better, the government implemented a law that when you retire, your pension benefits are going to be tax-free. are going to be tax free. Actually, what you get is going to be it's not going to be taxed. Yes. So if even you get a pension benefit of 2 million, it will be your 2 million. There will be no any tax, as opposed to the previous regime where when you get pension fund, you are supposed to the first 600,000 was supposed to be tax free, then followed by another 300 lump sum tax free, then the rest was supposed to be taxed. So there were element of taxation of pension benefit in the previous regime, but in this regime, the income earned once this law was enacted, Finance Act was enacted, then it means that it's going to be free of taxation or free of tax. So it's a good benefit. So I can urge you, if you have the capability, maybe you are able to contribute beyond this the upper limit, please do so. Just remit, have even the provident fund apart from your employer scheme. You can just have even another pension fund somewhere else so that you can contribute more, because this pension contribution is actually your own money. It's just to say delayed gratification, delayed payment. Yeah. So you are just keeping this money for your for you, so that you can benefit from it in your olden days. Yeah. In your golden days. So another thing I want to say, the benefit of NSSF contribution or NSSF deduction, which is it usually comes with tax incentive to both employer and both employer and employee. What do I mean? Yeah, so you say NSSF deduction is usually a deductible expense. Yeah, it's usually a deductible expense. So when you are calculating tax payable, usually deduct the amount that you contributed, to your pension scheme, to your registered pension scheme. Yeah, before you calculate tax. So this brings an effect of tax shield. Yeah, so it reduces the tax payable by both the employer and the employee. So from the employer, they deduct amount contributed towards towards the employee's pension scheme, and for the employee also they deduct amount contributed towards their retirement pension. Yeah, so that's lower the tax payable for both the employer and the employee. So that's an opportunity. It's called a tax. For the government, it's an incentive. For the citizens and for the employees or the citizens, it's a sense of tax planning or tax avoidance. Yeah, which is legal. Yeah. So I believe you've appreciated this, and now you know what next. In the next video, I will explain the deduction using somebody who is earning now above 108, because in 2026 the upper earning limit will be 108,000. So I will use that so that you can see how it will have a ripple effect. So thank you. I wish you a very happy 2026, and let's purpose that God is going to open opportunities for you, and also we are going to have good health in the coming year. So all the best, and see you in the next video.